Good morning. Welcome to Bazaar Morning Call. I'm Sonia Shenoy and with me is Latha Venkatesh and Nigel D'Souza. And from the entire team at CNBC-TV18, once again, here's wishing all our viewers Happy Diwali. Samvat 2079 has begun with a bang. We had a fabulous Muhurat session yesterday. And now the market is just about less than 5% away from that 52-week high. So it's all guns blazing. There was a sharp rally on Wall Street overnight as well. In fact, 2 days running now, we've seen good cues from the global markets. The Dow is up over 400 points. And there are a lot of earnings coming through from the technology space in the US market. So all eyes will be on that. Alphabet, Microsoft, Meta, Amazon through the course of the week. We'll keep tracking that very closely for you. But from our own markets, blockbuster numbers from ICICI Bank and Kotak Mahindra Bank will keep sentiment quite high. And that's what happened yesterday as well. You had strong performance from the likes of SBI Life as well. So we'll keep tracking all of these stocks. Reliance was just a bit of a drag because of the oil to chemicals business and the pressure over there. But otherwise, most of the cues that are stacked up are well in favor of the bulls. And we saw that progress yesterday. The SGX Nifty this morning, though, is indicating a slightly muted start. But yesterday, Latha and Nigel, was a really good session, befitting for the day.
Oh, absolutely. I think the global geography has changed a bit. I would think that now the markets are reassured that a Fed put or a central bank put is available. Until now, the fear was that the Fed could be aggressive, or in fact, all central banks could be extremely aggressive in its rate hike. Now, what's changed in the global market and which will benefit Nifty bulls as well is this WSJ article by Nick Timiros. He's usually seen as the guy who's very close to the Fed and therefore knows their mind. When he's saying something, the Fed is actually indicating that to the market. That's his. That's the importance of his report. And he has reported that several Fed members are now beginning to worry about too quick an increase in interest rates. This is following, the market had already penciled in the 75 basis in November, but they were beginning to pencil as 75 in December. Now, from what Nick says, it looks like it's going to be 50 in December. So that's one big point. And even before that, the way in which the taxes were rolled back in the UK, a government fell, and the BOE changed its entire philosophy and pushed in liquidity rather than withdraw liquidity because of financial instability was again an indication that the central bankers will not let down the market if it is a question of instability. Then inflation goes out as the goal and stability comes in as the goal. So that central bank put, BOJ has also intervened. This is definitely putting a bottom for the market. So my sense is that 3,400 or thereabouts, which was the S&P low on the day of the UK pension funds problem, I think that is going to be a near-term bottom. And to add to all this, perhaps a positive for India is also that the Chinese political turn with Xi Jinping being seen as packing the Politburo with his men, his zero COVID policy, the way he has gone after the tech companies, all this again would look like positive India because China becomes too dangerous to be touched at this point in time. The only point I would make is, of course, and as you pointed out, Indian bank earnings is again a big tailwind. The only point that I would want to put by way of caution is that, if it is a central bank put, it is going to be more pro-DMs. And we would be, we would still do well, but we could underperform DMs in the very near term, if that is the big tailwind. But for the near term, what's the logic looking like?
Well, Latha, Sonia, a couple of points. First, the global markets, they've seen a bit of a rally because there's the hope that maybe we're nearing the end of that rate hike cycle. That's at least as of now, going by what the San Francisco, speaker did have to say, and also going by the Wall Street Journal report. So that's point number one in terms of global cues. India, well, with regard to the Hang Seng or the Shanghai market, on the Muhurat session, we showed who's the boss, and it set a bit of a trend because yesterday the Shanghai market was down 2%. The Hang Seng was down close to around 5.5% to around 6% odd, and we were up 1%. So we outperformed by close to around 4 to around 7%. Institutional flows, that's been encouraging. I look at the FI and the DI number together, and the Nifty has been on the winning streak. And that coincides with what's happened with regard to the institutional flows. While the dollar index is well at around 112 odd, that's well behaved, and that's pretty good news from an emerging market point of view. The Nifty Bank is all set to go ahead and, hit a fresh all-time high. So let's take a couple of those points. Institutional flow number first up from October 14th onwards. I'm not taking yesterday's session because volumes are relatively low. But otherwise, in 6 sessions, they bought on an average close to 900 crores. I like that. The FI short covering continues. Remember, they were aggressively net short on the index, and they've gradually been covering out. Even yesterday, 13,000 short contracts were covered out. And in October 11th, the short positioning was 85%. Currently, the short position has come down to around 66%. So from being net short of 1.2 lakh contracts, we're down to 60,000 short contracts. Net, that is. FI short minus the long positioning out there. In yesterday's session, we had 2 strikes that were active, 17,700 put as well as the 17,800 put. So it gives us a bit of a range, for today's session itself. The range is 17,600 to around 17,850 odd, and the long bias will continue till the 50 DMA holds out, which is at around the 17,500 odd mark. The SGX Nifty, you need to compare what the SGX Nifty is doing with what the Nifty futures ended yesterday. And it seems yesterday we didn't do as much as the SGX Nifty anticipated. So that's why though the SGX Nifty in an absolute terms is showing a downtick, if you compare it, actually we'll be opening up with a gain of around 40 to 50 points. That's the SGX Nifty's indication. But the Nifty Bank, that's going to be the driver if we need to get to that 18,000 odd mark. Only 500 points away from those fresh all-time highs. And my guess is in the next couple of days, we could be there. Dare I say that we go there today itself. Expiry as well, so some bit of volatility will pick up because tomorrow we have a holiday.
Absolutely. It's one of those weeks, right, where there was a holiday yesterday, there's a holiday tomorrow, and by the time you come back, it's already the end, almost the end of the week. So it's kind of like a festive week, a little bit of a sleepy week, and I'm sure volumes could be also on the lower side because a lot of people are traveling as well.
Festive, I agree, but not sleepy. The bulls are up and awake.
Oh, the animal spirits are back, definitely. I mean, we're what, 4-5% away from all-time highs, and we have a new Asian origin Prime Minister in Britain as well.
Yeah,
so that was a big headline overnight.
Oh, absolutely. The third Asian origin PM. Portugal has an Indian origin PM. So that's another cause of celebration, perhaps. But it's time we got you the equity call of the morning.
Yes, we have a call coming in from Gautam Dugar of Motilal Oswal.